And if you're not investing aggressively in some, especially now that AI is making such a huge difference, and as these technologies converge, including blockchain technology, with the other technologies, with AI, if you're not investing aggressively, you're probably not going to win in your chosen other market. What do you become? You become a Bitcoin company, right? And so there's a balance here, right? It is very important.
Hey guys, welcome to Everyday Finance. Some analysts contend that the current chaos in the global economy, which includes trade wars, market volatility, and political theatrics, may be a result of a larger intentional strategy rather than pure chance. Cathie Wood, CEO of Ark Invest, offers a noteworthy viewpoint, arguing that what seems to be destabilizing unrest may actually be a strategic attempt to restructure international trade in the United States' favor. As a potential explanation for the turbulence, she cites former President Donald Trump's purposefully chaotic, attention-grabbing, and ultimately results-driven negotiation style. Wood thinks Trump is still very aware of the state of the economy and stock market, using them as key performance indicators, which may indicate more practical policy changes in the future. Even though he has criticized tariffs as economically damaging taxes with no actual beneficiaries. She suggests using assets like gold and Bitcoin to protect against instability as uncertainty increases. A more basic criticism is provided by author and tech entrepreneur Jeff Booth, who claims that the real struggle is not between nations, but rather between an unsustainable, debt-based financial system and the decentralized, deflationary model of Bitcoin. Her analysis of the global economy's structural problems raises the possibility that Bitcoin could be a game-changing remedy rather than merely a hedge. Watch the interview for further examination.
It's interesting. I think I mentioned this on another Bitcoin brainstorm, but we've had state treasurers or CFOs come to us. And, again, as you say, Matt, there is someone very influential, stirring that conversation. But, as you say, this is very early. They should have pulled the trigger when they came to us and we did all this work with them. Should have, because, of course, we've had a beautiful swoosh since then. But there is this, as you say, education we have to go through. The one thing that has happened here, the SEC approving spot Bitcoin ETFs has forced a conversation about a new asset class. And every fiduciary has a responsibility. If there is truly a new asset class that will increase risk-adjusted returns, they have to speed up their knowledge of whatever this is. So I do sense that is in motion. But you're right, it's very early. Yes, and he just wrote a paper, and we're going to post it on X. I've just asked him today, Art, because I think it's such an important paper. I believe that while everything seems chaotic right now, this is President Trump's way of negotiating, and he's learned over the years to sound crazy, make it all about him, and then have things come his way. I think we're going to end up with much lower tariffs at the end of all of this, but this is certainly a painful way to get there. And I think Art's write-up and the webinar both illustrate beautifully why tariffs are a bad thing, just bad. They're a tax increase, and it's just bad. So I can see, yes, Bitcoin being a hedge, gold certainly being a hedge. But I also know, we also know that Trump, even over the last few weeks, has been talking about the economy and the stock market as his two report cards. And so I think he's going to be a little more practical than people expect now. And I'm really happy that Elon Musk is in really Art Laffer's camp without even knowing him. So I think I'm not saying Trump is playing with fire, no question about it. And there are a lot of reasons for this flight to safety. But I think there's a method to what seems to be madness now. So that would just be something I'd share out there. In the public markets, this is happening. No question about it. The market has forced it. And the interest rate shock forced us towards cash-rich companies. In the private markets, not at all. Not at all. In fact, the investing there is so aggressive, especially if there's any relationship to AI. Now, maybe that won't work out. Maybe there's going to be a lot of commoditization in that space. But anyway, good debate, live debate. We could go too much in the other direction. I have a question. I have to be, as our focus is on all kinds of disruptive innovation. And if you're not investing aggressively in especially now that AI is making such a huge difference, and as these technologies converge, including blockchain technology, with the other technologies, with AI, if you're not investing aggressively, you're probably not going to win in your chosen other market. What do you become? You become a Bitcoin company, right? And, so there's a balance here, right? It is very important.
This passage makes the case that our current financial system is not only flawed, but also essentially rigged, created to favor insiders who bend the rules to suit their own interests. This creates a system that exacerbates inequality and fosters a poisonous mindset in which people view success as a zero-sum game. Cathie Wood claims that this is a psychological problem, as well as an economic one, instilling in people the idea that one person's success must necessarily come at the expense of another's. According to her, Bitcoin is a game-changing tool that provides a decentralized, uncorruptible substitute for conventional fiat currencies, which are subject to manipulation by central banks through money printing and value depreciation. Bitcoin is a peer-to-peer system based on truth and immutability that replaces top-down control. It is powered by transparent code and secured through decentralized energy use. Wood relates this to a larger historical trend. Whether it's the British Empire or contemporary fiat economies, empires that are built on financial manipulation eventually fall under the weight of their own corruption. She makes the interesting observation that early Bitcoin adopters frequently undergo a change in perspective. In a system where truth is ingrained in the protocol, cooperation makes more sense than rivalry. Therefore, Bitcoin is a philosophical movement rather than merely a form of money. It presents a future in which economic interaction is based on untrustworthy cooperation rather than coercive control, reorienting value toward creators and innovators rather than extractors and rent-seekers. According to Wood, Bitcoin is more than just a financial reform. It is a symbol of a more profound shift in society, particularly as established systems falter under the weight of systemic decay, inflation, and surveillance. It offers a revolution that is both financially and morally significant.
One of the reasons is, the public markets are very short-term oriented. Now, MicroStrategy right now might be in a different position, but over time, as it and the ecosystem matures, we've got accounting standards which basically say, and it's because of Michael Saylor that we now have the treatment of Bitcoin on balance sheets not as an intangible asset, which could only be written down but never written up. Now, FASB, again, thanks to Michael's good work, has said, okay, no, we won't treat it that way. But what do we have instead? We have now a mark-to-market asset. And, a lot of public managers don't like volatility. They like ruler stocks and ruler growth. And this is a problem, and especially our market has gone, our meaning the public markets, have gone really 75% algorithmic. And so they don't even know what these companies do. They just see, oh, missed the earnings, or, volatility is hit this level, sell, sell, sell. Is that there are very few alternatives out there. But I think I think what we're talking about is there will be many more alternatives. So there's scarcity value there. And MicroStrategy is acting like a closed-end fund right now, again, because of that scarcity value. So sure, the premium makes sense. But if we are all right here and others are going to start building up their treasure troves, and of course there are these alternatives in terms of ETFs, which are more institutionally friendly in some ways, and more heavily trafficked and understood. All of these will be weights on that premium going forward, I think. I agree with you to a certain extent. I don't agree necessarily that this premium is deserved, because there are other arbitrage opportunities out there. And you're right, he's a great salesman. He's been a great salesman for Bitcoin. No question about that. But I face the question all the time, and I do have to say, look, there are alternatives out there where you will not be paying a premium. I have to do that honestly, and so that's my only that would be my only argument against what you said. I actually think that's going to be important because, as an investor, I get a lot of advisors asking, what do you think about MicroStrategy here? Is this our leveraged way to play Bitcoin? And, I just look at it as of today, I think it's selling, the common stock is selling at an 87% premium to Bitcoin's NAV, and fully diluted 110% premium. And it is very hard for me to say, yes, you should, because anyone who had the experience with GBTC knows that premia can go to discounts. And over time, it is likely that this will, I don't know if it'll go to a discount, but that premium is certainly, as more and more companies add Bitcoin to their balance sheets, MicroStrategy's premium should go away. Now, one of the things, and consider the source here, one of the things that we're wondering is, a company could leverage spot Bitcoin ETFs, which do not sell they sell at NAV. Then you'd have, the reason they sell at NAV is you've got market makers out there arbitraging and creating very efficient markets. So I think the combination of those two things is going to bring this premium down in MicroStrategy over time. Well, it's an interesting moment in time because the dollar as a reserve asset is under some question. Now, in my mind, the dollar will remain a reserve asset and the reserve currency for a very long time. I could see a dual system evolving here with Bitcoin. But there's a lot of publicity, especially around the tariff drama and turmoil, about the dollar's role and the U.S. role in the global economy. And we have certainly China. I think it's taken its dollar reserves down from something like $1.3 trillion to today, roughly $700 to $750 billion. So that's speaking loudly. And is it because it needs to draw down those reserves because of something happening internally, which is a debt deflationary bust? Or is it making a loud statement about wanting to evolve a new reserve currency and ecosystem? So just this kind of instability is an invitation for asset managers in particular. You asked me about treasuries, but I'll start with institutions, asset managers, to look for a hedge. And you've seen Bitcoin certainly over time start to play that role. And gold is kicking in now a little bit more dramatically. So again, this is just speaking to the uncertainty out there and the flight to safety and the foreign exchange volatility that many are expecting to continue, if not to increase over time, unless this trade turmoil and tariff turmoil dies down. And so in terms of treasuries, I mean, our first exposure, this was very early on, of course, when Square at the time, it was called Square, and Tesla and MicroStrategy in its early days put Bitcoin on their balance sheet. And, that stirred a lot of controversy. Believe it or not, the biggest controversy at the time was environmental, especially when Tesla put it on the balance sheet. And we had to do a 5-hour seminar around how this was a misperception and a lot was going to change on that front. And we did it with Jack Dorsey and with Elon. I think it's still up on our website. So I think we're through that controversy. And now I do think it's being considered more as a real potential hedge against the volatility out there. And so we don't see a huge number of companies rushing, but definitely the conversation has picked up. It's something that we're talking to our companies about as we're doing our callbacks at the end of the quarter. So I do think we're going to see it more and more over time.
This summary criticizes the global financial system as a $900 trillion house of cards built on unsustainable $600 trillion debt. All major asset classes, real estate, stocks, bonds, are intricately tied to this massive debt load and carry counterparty risk, making them vulnerable to collapse if the system stops expanding through relentless money printing, according to Cathie Wood. Only continuous monetary inflation keeps this fragile structure alive, which paradoxically deepens the rot by inflating asset bubbles. Bitcoin, a decentralized, non-counterparty asset based on energy and math, is unlike political manipulation. In a fiat-declining world, Bitcoin is a neutral protocol with fixed scarcity that reprices all other assets, according to Wood. Most view Bitcoin as a collapsing fiat, but its strength is its resistance to debasement and manipulation. Cathie claims that Bitcoin is the only way to save fiat currencies from their terminal decline by providing a monetary truth that doesn't bend to central banks' printing. Bitcoin, like the internet, is a winner-takes-all protocol that enforces honesty through free market discipline. Bitcoin's purity is at stake as stablecoins and centralized derivatives threaten its decentralization. Real transactions, Lightning Network adoption, and self-custody are essential for native Bitcoin use. Wood portrays Bitcoin as a revolutionary, corruption-proof system that can reset the faltering financial order. In the end, humanity must choose between the decaying, debt-fueled fiat system or Bitcoin's unalterable, cryptographically verified rules. Thanks for watching.